Nelson Nash said you should be in at least two businesses. I think maybe you should be in three starting out, and you have your day job, you have a side hustle, and then maybe that infinite banking policy as well too.
Your banking business. No, and
Yeah.
I think you should have exactly it. You should have multiple streams of income coming in. So and hopefully as time goes on, the income keeps rising, that we are putting the money to work to then take back the time freedom. Hello, Money Multipliers. Welcome back to another episode of the Money Multiplier Podcast. I'm your host, Hannah Kesler, and we asked ourselves, do our dollars make sense? Today, I'm here with a phenomenal individual, and what I like about this gentleman is that he's actually in the same demographic age range that I am myself, that Gen Z millennial demographic. So I just thought he would bring some really cool insights into what he does over on his tax strategies, estate planning, working with business owners. So I'm going to bring on Anthony here, Anthony Brister. He actually is living in the Houston area, so over there in Texas. He's a young gentleman, so he's been establishing his firms. He's got two firms in the Texas area, but he works with clients all across the United States. But I thought it would just be kind of fresh and organic to bring somebody young into this with different perspectives and mindsets. Because I know I've done a few recordings and interviews with some folks who are a lot older than myself in those higher demographic age ranges. So I think this will be kind of a fun conversation. So Anthony, good morning here. I know it's morning time as we're recording. How are you doing today?
I'm well. Thank you for having me, Hannah.
Absolutely. So I wanted to bring you on, I guess, really because, something that I always think about to myself, I don't know about you, but probably are most of the people that you're talking to, would you say they're maybe 40 years and plus older in age? Is that more of the demographic or?
Yeah, most of the people I do work with typically are 40, probably to 60 range. But as time continues to go, I am getting more and more younger people. And one thing I really hope to inspire are the younger generation to kind of take that risk and step out and get entrepreneurial.
Yeah, yeah. And do you have siblings?
I have a younger brother, Corey. He's 2 years younger than me, and he actually works for me too. So if you guys ever have a discovery call, you might actually be in contact with them.
Okay. And talk to me about like your background, like your upbringing, what were your parents into, and have you always lived in Texas?
So I was actually born in Florida, Zephyr Hills, Florida, kind of a smaller town there. Was raised by my mother. She was a single mother. She passed away when I was 10 in a car wreck. After that, my grandparents raised me from 10 on up. So I moved to Texas when I was 10. I kind of moved around when I was younger. Um, they kind of ingrained into me some of that older generation, especially, being from the baby boomers on up. Um, Went to college, Henderson State. I played football there, got a degree in finance. I worked a little bit at JP Morgan, actually started out as a life insurance agent back in my day, and then decided to go into more of the financial field. Then I decided to go to law school, went to University of Houston, got a job after graduating, got my master's in tax law. And ever since then, I've been working with business owners, high net worth individuals doing asset protection, tax planning.
Yeah. And why that field? Did you always have the money mindset? Were your grandparents teaching you about money? Why did you go in that direction?
So growing up with single mother, we, had a lot of rough times. So I grew up kind of knowing this is not how I wanted to live. Didn't really have too much business exposure, but when I got my finance degree, I really saw these big corporations. You hear all the time about how the rich don't pay any taxes. So I decided when I went to law school that, hey, I'm going to focus on tax because corporations, these ultra wealthy people are using the tax code. So I'm going to learn how to do it and then teach people kind of in that middle class, lower upper class, how to use the tax code and be tax efficient and grow generational wealth.
Yeah, yeah. And now, okay, so talk to me about this. I want to talk about business owners here, but for my people, like I don't know about you, but I get folks from all walks of life. Last night, I was on the phone until about 9 o'clock at night talking with someone who's 70. She doesn't bring in too much of income, about 300 a month from Social Security checks, but other than that, she's just living off of her savings. To people like last week, I was talking with someone who's 22, making 36,000 a year, has a husband and a young child, and they're just different, they're in different phases of their life. So for my people, like let's say I'm producing 50,000 a year in income, what should some of these folks be doing to prep themselves for the future? And before you even answer that, I'll tell you, like, my people, when it comes to like the infinite banking side, one of the first things that we got to do is that, hey, you need to understand your budget. And I hate, I don't love the word budget because that kind of like turns people off, but more so like the cash flow, what's coming into the family, what's going out the door. It only matters how much I'm keeping every month. And so where am I storing that money that I'm keeping? And those dollars that should be flowing towards the policy. And so I kind of think about it as, the policies are where I'm storing or and protecting the wealth is that bottom foundation. And then when I go up one level, that's where I'm doing my planning, my asset protection, my tax strategies, because hey, there's a tax code for the informed and there's one for the uninformed. So, if I am in that quote unquote lower income level, let's say 50,000 a year, what should I be doing right now to prep myself?
Well, I think, first thing I always say is start a side hustle. Don't quit your day job. Let's try to get that income up. And when you start a side hustle, you open up that door to the tax code. So you get deductions, you get to write off your cell phone, some travel, home office, things like that. Nelson Nash said you should be in at least two businesses. I think maybe you should be in three starting out. You have your day job, you have a side hustle, and then maybe that infinite banking policy as well too.
Is your banking business. No, and
Yeah.
you should have exactly it. You should have multiple streams of income coming in. So and hopefully as time goes on, the income keeps rising, that we are putting the money to work to then take back the time freedom. So now I guess for my business owners, right? A lot of people ask me all day long about how we're using policies for business owners and using it within the business strategy of things. So for my business people, if they don't have like a good person tax planner that they're going to, I mean, what are some of like the first conversations that you're having with people on those discovery calls if they are business people and let's say that they're making 300,000 a year?
Yeah, I mean, and really for anybody, my process is a little bit different than most in that I don't want to work with hundreds of thousands of people, right? I like having a relationship based. So first off, we have a discovery call to see if we're a good fit. If you're a jerk to my paralegal, probably not going to be a good fit for us. We want to work with nice people. But then once we get through that process, we really have a comprehensive consult. And I work really cradle to grave. So anywhere from starting the business all the way to selling, passing it down, and then anything in between. So whether it's your bookkeeping, tax prep, or other ancillary legal services. So starting out, we have a comprehensive consult where we look at your estate plan, we look at your business or your side hustle, talk about your goals, 5, 10 years, look at your retirement, kind of what you're planning, your cash flow, look at all of that, and then come up with a plan of action. Most of the time, most people really are missing a lot of common deductions like cell phone expenses, internet, paying family members, if you have children, paying your kids, getting them on the payroll, home office, vehicle, things like that. Those are the low hanging fruit. And then it really comes down to after that business structure and making sure that you're utilizing the proper business structure and then meeting regularly, whether it's monthly or quarterly, to come up with a tax plan and then actually following up with that tax plan to make sure that we get it implemented.
Yes, and you hit the nail on the head. That's why I really enjoy you, because I like to bring people around who are going to be there for the life of my business, the life of my policy. A lot of people just get hung up in, okay, I'm going to do this first initial sell, and then after that, I kind of make the joke. It's almost like trying to get a hold of the Pope to get them on a phone call with you or give you some answers back. I've actually had to fire my trust guy because he wasn't helping me in the arena that I needed his help on. And it was more so like I kept having to poke. And I don't want to do that. I need someone
Yeah.
who's going to be there to care and treat me like a family member.
Yeah, and I mean that's where I said, again, it's all relationship based, and when you're very transactional, you tend to get overloaded, and that's not what we're trying to do. We want relationships, we want to be meeting regularly, and we want those clients who actually see the value in that, so that we don't have to go out and get a couple thousand clients. If we can have good set of clients and we continue that steady work and we're growing together.
Yep. And you create the loyalty, the trust. And then honestly, for all of my business owners that are out there, then they honestly start to become like a walking billboard for you. They just keep referring. And people will trust you because they have that trust from that other person that they deeply trust. So let me ask you this then, like, what are some of like the common, I don't know if I want to call them products or vehicles. I know we kind of talked about the deductions, like the low hanging fruit of what we could be taking, the home office expenses, cell phone, internet, and different things like that. But are there like a common vehicle that you're helping folks obtain to go to that next level of the asset protection, the tax strategies?
Yeah, and I think, it starts at levels, you're right. So first off, everybody should have an estate plan, number one. My focus is generational wealth building. So without an estate plan, everything that you worked hard for could go to waste. It could get caught up in probate, legal battles, things like that. So first off, I almost always recommend having a revocable living trust. After that, if you're a business owner, you probably want an LLC. And an LLC, people get that mixed up a lot of times. Doesn't provide any type of tax benefits, the LLC itself. What that does is provide asset protection. So if you've got an operational business, you're carrying some risk around, or maybe you've got a rental or something like that, we want to put that risk in a wrapper. I think of LLCs as buckets of risk. So we never want to fill up a bucket too much, but we also don't want that risk in our own personal life bucket. So we start with an LLC. After that, once we reach around 50,000 of net income, for an operational business, we look at putting it in an S corp. I follow a model similar to Mark Kohler. He calls it a trifecta, but really what that is having a revocable trust, having an operational business, and then having holding companies for more passive income. So if you've got rentals, third-party investments, things like that, we typically can put that in LLC, but we don't want that mixing in with your operational business. After that, once you start building a lot of wealth, we look at charging order protection LLCs. There's some states that give you higher asset protection. Family limited partnerships, I work a lot with as well too. And when we're looking at LLCs, there's two different types of protections, right? So an LLC by itself gives you inside protection, when what that inside protection is for rentals or your business, right? If someone trips and falls in your rental property, or you do something negligent, or an employee does something negligent in your business, liability will stop there. But
Mhm.
we also carry risk outside of the business, driving down the road, doing whatever it might be where you might get civilly sued. That's outside protection. And typically we use the charging order protection, LLCs, or family limited partnerships for that asset protection there. Um, Lastly, there's a lot of bad information about irrevocable trust. Irrevocable trusts do give you asset protection. The problem with that is that 99% of people don't need an irrevocable trust. They can use the charging order protection or the family limited partnership. Once you put something in an irrevocable trust, you don't get to change any of the terms. You can't pull it in and out. It's really not flexible. So irrevocable trusts are for those people who are 20, 30 million plus. If you're below that, these other avenues really is where we should do. So I kind of look at it as a stepping stone. I know that was a lot. Uh, but that's how we kind of do our approach, and it really is a stepping stone. So we don't want you putting stuff in an irrevocable trust if you're not even have an operational business, or you're just barely making 20,000, 30,000 a year.
Yes, yes. Hey, now, and I know this is, I could do this just with a quick Google search, and some people know this, some people don't, but like, what's the difference between revocable and irrevocable?
Yeah, so it's in the name. A revocable trust, as long as you're living and of sound mind, you can change the terms. A revocable trust doesn't give you asset protection. The sole purpose of a revocable trust is to avoid probate.
Mhm.
Irrevocable, like I said, is in the name. So once you set that up and you put something in there, you can't change it. It does avoid probate. There's some estate tax benefits, but again, most people want flexibility and control. So once you put stuff in there in the irrevocable trust, you lose that flexibility and control. Um, it's really a tool for the ultra high net worth. Um, Most people, again, probably take a step lower, retain that control, flexibility, and use a different tool there.
Yeah, no, that's good. Yeah, because I know all day long we're talking about, how to build the wealth, how to create more cash flow that comes into the family. But really, I want to talk about how to keep all of it. And that's why I wanted to bring you on here today. Now, especially at the time of this recording, things are nutty here in America, with all the political stuff that's going on, the market's kind of out of whack, and what the Fed may be doing here soon. So, I mean, where do you see like future trends here until we get up to that election time of, businesses and wealth management? Are you seeing people protecting more of their money? Are you seeing people hoarding more of their money, not so much spending right now? Like, what are you seeing in your business?
Yeah, I see a lot of people kind of holding on. Uncertainty really causes fear, and when there's uncertainty and fear, most people tend to start hoarding the money. For me, uncertainty is opportunity because people are scared. They don't know what the tax law is going to be. The tax law is supposed to change at the end of 2025, and depending on who gets elected come November, that may or may not happen. Um, right now we're at a very low tax rate environment, one of the lowest in history. So one thing I do see too is a lot of people trying to find ways to get in some tax sheltered vehicles, especially because we're at the lowest tax rates. And with this government spending, all of the policies coming into effect, taxes are more likely than not going to go up. And if not, in the next few years, it's going to go up at some point.
Mm-hmm. And talk to me about like what is like one of the most common mistakes that business owners are doing? Let's just talk even like in the framework of people starting their own business, they're starting their entrepreneurial journey. What is one of the biggest mistakes that you're seeing people do?
And this might be a little self-serving, but not consulting with a professional is one big thing I see. There's a lot of DIY, LegalZoom, all of that stuff where you might can set up an entity or set up something fairly easy, but you don't have that knowledge that comes with using a professional. Secondly, I see a lot of, and which is why I kind of wanted to be full service, is you've got 5 different advisors and they're all pulling you 5 different ways.
Yep.
And that's why, again, advisory services, and I preach and preach, we should be meeting regularly with you and your team, making sure that we all have your vision in mind and we're moving forward towards your goal, not self-serving and, pulling you in different ways there.
Yeah, yeah. I even had to have that conversation not too long ago, like with my tax guy. I said, hey, you're handling like my 1040 side. I got these other people over here handling like my trust and the foundation stuff. Is there a need of why I got to have two people? I should really just have everything housed in one location. Really, it came again selfishly from
Yeah.
am I spending double money here doing both? But then also just to expand the mindset of I want everything just housed in one location so that there's no miscommunication in what we're doing. Everybody's on the same page with the game plan and the future direction of where I want to go. And so that's why I think it's so important when you say that you're full service, everything's in house. Tell me specifically. So we got CPAs, we got our tax guys, and we got our trust and estate planning guys. So when you say that you're full service, what are all of those services that you're doing for people?
Yeah. So, like I said, cradle to grave for entrepreneurs. So, business formations, estate planning. Again, we shouldn't really be forming businesses, thinking about generational wealth without doing estate planning. We've got bookkeeping. Uh, we've got the tax prep. So, I work with some CPAs. I myself have a master's in tax law, and I've got a few accountants that work for me as well. So the tax preparation and then tax planning and tax advisory. And then besides that, I also team up with some whole life insurance agents, infinite bankers, and then also a traditional financial advisor. So I have all of those people on my team. And again, really, we're meeting regularly to review all of those things.
Okay, no good. Now, let's take this scenario. Like, let's say that I'm starting, let's say we're here January 1st of 2025. I don't want to talk about what happened last year, filing my taxes for last year. I want to know what should I be doing to prep myself for my 2025 taxes that I got to file. Am I waiting until the middle or end of the year to have that meeting with you? What should I really be doing throughout this year to focus on, okay, this preparation of me working on my business, making sure that I'm doing everything to the max capacity to keep the wealth that I'm building for myself? Because that's all that we're trying to do. Yeah, I want to pay the taxes that I rightfully owe, but if there's things that I could take advantage of, I want to be doing it. So what are kind of the strategic steps that I should be doing as I'm walking through the course of that year?
Yeah, I mean, again, I think it goes to which level you're at, right? So if you're at maybe that 50,000 mark, maybe a meeting sometime October, November, or maybe once a year makes sense. But the biggest thing is to be proactive about the planning and not reactive. Most people come to me January, February, March, April of the next year and say, hey, how can I mitigate my taxes? Well, there's only a few things you can do there, and it's pretty cookie cutter. So the time to plan is during the year, whether you're meeting once a year, quarterly, or monthly. Um, from there, W-2 earners, if you just have a W-2 job, I really have 3 recommendations. It's start a side hustle so that you can get your income up and open up the tax code so you can use deductions. Either have a spouse or yourself become a real estate professional, or buy a short-term rental. As a W-2 owner, you're pretty limited, or a W-2 worker, you're pretty limited in what you can do there. Now, business owners, we've got the whole tax code to work with. So really that planning comes into effect, and we take a look at your income, what your goals are, what you want to do, and decide, how often we want to meet and come up with strategies throughout the year, and then also follow up on those strategies to make sure that we're doing it. A lot of times people will pay a big, pretty penny to set up a huge, beautiful tax plan, and then they'll just let it go to the wayside. They won't actually act on it. Or they might implement it for the first few months, and then, they lose track of that advisor. They don't talk to it. They're scared they're going to get billed. So they end up not implementing the strategy completely.
Yep, yep. And a failure to plan, a failure to plan is a plan to fail is really what I'm hearing out of that.
Yes, yes.
So, all right. Now, are you having meetings with, husbands and wives or our spouses, even business owners together? Are you making it a requirement to have them on the call to make sure that they're all on the same page, or kind of does it depend sometimes?
I don't make it a requirement, but I do strongly suggest it. I was raised by a single mother until she passed away. I feel like it's getting better, women getting involved in finances and taking some control. But I don't think that it should be on one person, because more likely than not, one of us, if you're married, is going to pass before the other. So it's good to have that picture there. And then also, I really highly encourage, if you have children, getting your kids involved too. Um, Teaching them those money conversations, how to use a business, teaching them about those mistakes that you made and you had to learn the hard way. Myself, I've learned the hard way a few things, where if I just had someone say, "Hey, dummy, don't do that, and here's why, here's my experience," it really sets the kids up for success and puts them ahead.
Yeah, yeah. Hey, also, I want to shout this out real quick because you brought it up. But for my community, y'all, Chris Noggle and I were in the middle of writing even just a children's book about the infinite banking concept and making it for kids to understand. Because I always say, if you get off of a conversation with anybody, someone who's just trying to educate you on a new topic, if you can't go away from the conversation and explain it to a sixth grader, I don't think they did their job very well. And so it's just very, very important to have that clear communication with that person that you're working with so that you can go to the next level, keep scaling up. So I appreciate that, just even just bringing the kids around. And I talk about that a lot too. A lot of people, it's hard to change the mindset of what we have been taught all these years. Start them young. I mean, shout out to the backwards bicycle video. It was a gentleman, and you can go find this video on YouTube. Just look up the backwards bicycle from a channel called Smarter Every Day. But he talks about riding this backwards bicycle, and he teaches his kid how to do it, and it's a lot easier for his kid to get it, for it to click. And it's just because he's younger, he doesn't have to totally rechange that thinking and those habits that he's been living for decades. And so it's just easy for him to come into it. So start young. I mean, that's what I'm trying to really get across to my people. Start young, start now. As Nelson would always say, when was the best time to plant a tree? It was 20 years ago. When's the next best time? It's today. So I think people need to start today and really thinking about this stuff. Because I hear y'all too, like on my past YouTube videos, y'all are saying, hey, that this has been great, because I always think about, me keeping to building the wealth, keeping the money and the cash flow coming in, but not so much with the protection of it. Because Anthony, I know we did a podcast together on your channel, and I want you to shout out your podcast that you have going on. But if people really aren't planning for this, they're leaving it up to one of three directions. I can give my wealth to my generation, my family. I can give it to the charity, or I'm basically giving it up to the governments because I didn't prep for myself to do this.
Yeah, no, I agree completely. And, you said a lot of good things there. I think one thing that prevents a lot of people is kind of that mindset that you talked about, and money being evil or taboo, uh, and kind of feeling that shame around money where, you are where you are, and there's only one way to get out of it is to take action. And what's really taboo is leaving your family with a big mess when you pass away. Most people want to leave a legacy. So get that fear, get that shame, out of your head. It's okay to feel it, but take action. Have that talk, have that uncomfortable talk with your family, your children, so that you don't leave them with a mess, and they are better off without you once you kind of started that process than without you.
Yep, yep. And it's okay to ask for help, is what I'm hearing. It's okay to ask for help. We're all here just to help serve the community so we can keep going in that forward direction. So, last question I want to ask you. So, when it comes to the infinite banking concept and you're having that conversation with people, a lot of people ask me, like, hey, how do I explain this to my friend or my brother-in-law who's really does not have that money mindset? So like when you're having conversations about money, and specifically, I want to hear you because I get it. You're not over here talking about IBC day in and day out every single day. How are you explaining this to them? How would you explain this to a newbie?
Yeah, I think, first off, you know, there's bad rep with using whole life insurance. So, uh, I talk about whole life insurance and why we would like that. First off, it's permanent insurance. You're guaranteed to die at some point. That's just whole life, vanilla whole life right there. You want to guarantee a legacy, there's no better way than permanent insurance, really. As long as you pay that premium, you're guaranteed to have it, especially with whole life. Secondly, IVC is really a process of paying yourself back and kind of taking charge of the financing needs in your life. So it's about the process of how you do it and how you pay yourself back. And then, really, thirdly, like I said, I look to big corporations, wealthy individuals. What they do to build wealth is use leverage. And what I really love about the IBC concept and using whole life is the ability to leverage the cash value that you built up inside your policy. Um, just like Elon Musk, Mark Zuckerberg, anyone else who has a major company, most of the time they're not selling their stocks and selling their assets when they need lifestyle expenses. What they do is take loans out against those assets. So what we're able to do at a much smaller level is leverage that asset of the life insurance policy, take out loans, hopefully to buy cash flowing assets, but you can also use it for debt payoff or lifestyle too. Um, and while that you're using that money, that policy is continuing to grow, just like Elon Musk, Tesla, or, Meta, whatever. They're using those loans. They're making more than what they're spending, and they're not interrupting that compound growth of that asset.
Beautiful, beautiful. Hey, and then I know I said last thing, but I want to ask you this. This is just for my own I don't know, I just want to know, because a lot of people ask me too, hey, how do I use this policy to supplement my income during those retirement years? And hey, y'all, we got our mastermind that's coming up in October 10, 11, 12, Nashville, Tennessee. If you go to themoneyMultiplier.com/mastermind 2024, we're going to be getting deep into how to use policies to take out distributions, withdrawals, tax-free withdrawals that I can then live on for my expenses. But I talk about it all the time. Actually, this morning, I woke up to a text message. It was actually from my older brother, and I have a niece and a nephew. It's his children, and and Sean, okay, so it's Sean, and Sean was texting my dad and I saying, hey, I had a bank meeting yesterday for Tori, who's my niece. And Tori, she's 15 years old. She's opening up her checking and her savings account. And the banker was talking to him saying, hey, Sean, you could pay her because Sean has his business. He's owns a property management company over in North Captiva Island down here in Florida. And hey, you can pay her $13,000 a year, and that could take some off of what your business revenue and kind of save yourself on the tax side. But then he continued on to say that, hey, the banker was also talking to me about putting a good chunk of her money into a Roth IRA, and that he was showing examples that 30, 40 years into the future, hey, look just to see what's happening over here. And that's a very traditional way of thinking, using those Roth IRAs, the 401ks, self-directed accounts and different things. And a lot of people ask me, well, hey, Hannah, you talk all the time about you not putting money into the 401k, not putting money into the stock market. What are you doing for your retirement and planning for it? And my answer is very simple. I'm using my policies, the cash values today, to leverage against, to buy myself cash flowing assets, whether it's real estate, buying businesses, whatever I like, know, and understand in the investment world. So then when I get to that time of my retirement years, I can use my policy cash values plus these passive income streams. And then that's what's going to supplement my income during those retirement years. You, Anthony, and you don't have to share if you don't want to, but what are you thinking about during those retirement to prep yourself? What are you kind of thinking of right now?
Yeah, so I've been torn about this, right? I'm actually not completely against Roth IRAs and kind of using Roths. Now, personally, I don't think using traditional money is a great fit for everybody, especially because, again, we're in the lowest tax years that we've been at. So I think taxes are going to go up for my business owners too. I don't know about you, but my plan is to keep making more money, not make less. So, Roths I think are good, especially for those people who maybe don't take control of their finances. They want to be more passive. They don't have that knowledge. For kids too, it's a good vehicle to put it out. The good thing about the Roth is you can take out what you put in. So, that's not terrible there. Um, but also I've kind of limited my retirement accounts and started going towards the IBC because for me, cash flow's important and you don't necessarily get to see that cash flow in retirement. I don't want to wait 30 plus years or however long the government says that I have to wait until I pull it out. So I like using whole life policies using the IBC concept because I can use that cash now to go out and buy income producing assets. One thing too, you talk about paying your kids. You can actually pay your kids up to 14,800 a year.
Okay.
You just want to make sure to get them involved in the business and they're actually performing services. And then, there is a right structure to where if you pay them correctly, you don't have to pay any taxes. So, instead of putting that money in a Roth, you could put it in a policy to have control over that and use that to go buy assets for your family and produce that family wealth there.
Yep, and that's a conversation that I'm having with him. Devin Burr talks about this all the time. Devin Burr is a mentor on the team. And y'all go out and check what Devin's doing in some of his stuff on TikTok, Instagram. He goes by Mr. _Burr, BRRR. So go out and just check on some things that he's doing. But you hit the nail on the head, because one of my biggest pet peeves of sometimes some of these financial advisors of what they're telling their people is, hey, no, it's okay. Go and put your money into a 401k or traditional IRA and different things, because you know what? When you retire and you're in the future, you're not going to be making as much money, and then you won't be paying as much tax on that money. I think it just freaking blows my mind if people really start thinking deeper on that.
Yeah, and we talked about this on my podcast too, but I'll say it again here. It's not always the case, even if you don't have cash flowing assets, that in retirement you're going to make less. One, tax rates might go up, but then two, there's something called required minimum distributions. And once you hit that 73 mark, you're required to pull money out of that, whether you want to or not, whether it's beneficial or not, or else there's a 50% penalty. So as you get older and you built up all this wealth in a 401k or a traditional IRA, you're going to have to pull that out, whether it's beneficial for you or not. And then what happens a lot of time, and I've seen this working with some older clients, is one spouse might pass away and they've got required minimum distributions turned on. So what happens when one spouse passes away is you lose a married filing jointly tax bracket. So you go to single, where during your working years, you were using the married filing jointly all throughout. And now you've got this huge required minimum distribution in a single filing tax bracket. So you actually end up at a higher bracket than when you were working.
Mm-hmm. And there's just so many things that's going to change. It's life. It's life happens. Things are going to change. We're going to have windfalls. We're going to have downfalls. We're going to have deaths in the family. We're going to have new members of the family join. And that's all we want. We want the control. We want liquidity. We want access to our money. And so that's anyways, just why I'm just so passionate about this stuff. But no, that was perfect. So thank you. Thanks for sharing a little bit of your insights. And hey, how can people find you, and talk to me about your podcast show too? Where can people find that?
Yeah, so right now we're on YouTube for the podcast. It's called the Wealth Planning Podcast with Brister Law. You can find me on social medias, the Brister Law Firm. Like I said, if you're interested, go to my website, bristertaxlaw.com, schedule a discovery call, see if we're a good fit. From there, we'll have a meeting. Again, don't be a jerk to my paralegal, or you probably won't talk to me. Uh, but really, I say social media, or go to my website, bristertaxlaw.com, reach out and let's have a conversation.
That's it. That's it. All right. Well, I appreciate your time here today. And before I let you go, is there anything else that you want to leave to the community? Any advice as they progress forward? At the time of this recording, we are starting August. I cannot believe we're already here in August now of this year. We're almost, I don't know, let's call it 70% of the way through the year. Are there things that you want to leave the people with of what they should start doing, or some advice?
Yeah, I think really it goes into just take action. Get out of your own head, analysis paralysis. Do your research, do your due diligence, but then don't be afraid to take a risk, take action. Um, just take small incremental risk. And eventually, that's going to pay off as you keep chugging along. But don't be so scared that you just sit there and do nothing.
Mm-hmm. Keep educating yourself, y'all. All right. Never hit the arrival syndrome, as Nelson Nash always says. And this is your reminder. We are almost through the year. We're halfway done. Have you reread Becoming Your Own Banker? We need to do this at least one time a year, in my opinion. Listen to it on audio. There's so many things once you keep rereading things over and over, especially when you're at a different time in your life, you may pick up or see things in a different light. So keep absorbing, keep hanging around the campfire. If y'all didn't know, we host 6 live webinars a week. We got our Facebook group with close to 7,000 members in it. I mentioned the mastermind that's coming up. So if you go to themoneymultiplier.com, underneath the resources tab, you'll find the events and different things, books, the podcast, blogs that we are posting out. So go out there, kind of hang around the community, hang around the campfire, drinking the Kool-Aid is what Dad says. Actually, somebody got mad at us one time when he said that. I'm like, okay, y'all are just way too uptight. But anywho, so like, comment, and subscribe, y'all. If you got questions, put them down below. You can also reach out to me, podcast@themoneymultiplier.com. Anthony, I'm going to drop your info down below too. And I'm also going to link our episode that we did together. So if y'all kind of want like a part 2 to our conversation. So thank you, y'all, for being here today. I'll be back next week with another episode every Tuesdays. I'm posting these out. So thank you for being here. Really appreciate y'all. Until next time, I'll see everybody then. Bye.